Hey, MCE crew, today we're going to go over how to read a stock. Now, this is something that may seem pretty basic to some of you, and that's fine. I still want you to watch the video because if I miss something, then I need the crew to say in the comments, hey, you forgot to talk about this, and we can give out more information. Now, of course, if you're just starting your journey to financial independence and you're like, I want to get into stocks, or I've been dabbling here or there, but I really need to know more about what I'm doing, then you've come to the right place and you're watching the right video, because we want to take the time in this video to show you how to simply read a stock table or interpret a stock chart. Now, let me give you some advice here. This is easy. There's nothing to it. Okay, don't sweat it. Don't let it intimidate you at all. I learned how to read the stock tables when I was very, very young. Okay, I'm talking before I was even a preteen. I learned how to read these stock tables. But back then, it wasn't computerized. It was all in the newspaper. It was printed once, maybe twice a day. Okay, you had two newspapers that came out at that time, a morning edition and an evening edition. But it was all in the newspaper, very fine print, and it was in fractions, not decimals. Okay, and that made, that added a step, that added an extra layer of complexity to the whole thing. But we are advanced now. It's easier than ever to be able to interpret a stock, and it's important that you learn how to do so, because when you buy a share of a company, you own a little slice of that company. And as an owner, you need to know what's going on with that company. Okay, so this is why you need to pay attention. So let's get right into it. Now, today we're going to use Tesla as an example. And the reason we're going to use Tesla is because it's got a lot of dynamic little things going on that'll help in the interpretation process. I don't want you to misinterpret us using Tesla as an educational example for me endorsing the stock. I am not doing that. I'm not telling you to buy it. I'm not telling you to sell it. I'm just saying this is an example we're going to use. And if you're interested in Tesla from the standpoint of stock ownership, then maybe this will help you do your due diligence and figure out whether or not it's for you. So let's start off at the beginning. Tesla, you see that front and center on the chart. Tesla Inc., it's the company name, of course. Then we have TSLA, it's the ticker symbol. Now, a ticker symbol is just a 3 or 4 alpha character series that's going to be the abbreviated identifier for the stock. So if you want to look it up, see how the company's doing, type in TSLA. And Google and Yahoo and Bing and DuckDuckGo, they'll all give you the stock, what it's trading at a particular point in time. Also, if you want to buy or sell this, you're going to have to put that ticker symbol into your brokerage account in order for them to know exactly who you want to buy, sell, or otherwise trade with. Now, I will caution you, make sure this ticker symbol is correct. Back when we had the 2020 and things started brewing up with the lockdowns and Zoom became very, very popular, people went in and they thought that they were buying Zoom, okay, because they wanted to buy the stock, because obviously more and more people were getting on Zoom and the company was, doing gangbusters. And what ended up happening was they bought ZOOM, which was a defunct Chinese company. They wanted to buy ZM. That's the ticker symbol for Zoom. So be very, very careful when you are putting in ticker symbols, because you don't want to buy the wrong company. And it will be user error if you do that. You have no one to blame but yourself. Now, you see here NASDAQ. That means that Tesla is trading on the NASDAQ. What is the NASDAQ? The NASDAQ is actually the second largest stock exchange in America, ranked by the market capitalization of the shares traded. They're second largest, right behind the good old New York Stock Exchange. So that's the exchange that Tesla is trading on. If it was trading on the New York Stock Exchange, you would see NYSE. But in Tesla's case, of course, it is trading on the NASDAQ. And if you really want to get technical, it stands for National Association of Securities, Dealers, and Quotations. So there's a bonus for you. Okay, so let's see here. Of course, what you're interested in, probably most of all, is the price. So there's the price of the stock. Okay, and they're telling you that's trading in United States dollars. And they're going to give you, if the stock is trading, they're going to give you what the stock is up by how many dollars, or what it's down by how many dollars, and the percentage. Now, this on, DuckDuckGo or Yahoo or what have you will change, of course, throughout the trading day. Now, the great thing about this is at a glance, you can tell if it's green, it's going to be up. If they print that figure in red, it's going to be down. And then that's going to give you the overall what it is at any given point. It's also going to display the percentage up or down. Now, this will not change if it's not trading. Okay, so on the weekends or holidays or outside the trading hours, this won't change. And just so that you know, the stock exchange is open from 9:30 a.m. to 4 p.m. Eastern Standard Time on most days. They do have a schedule that tells you when they're not open because of holidays or what have you. Next, you're going to see the open, high, and low. So this will give you a snapshot of the range at which the stock has moved throughout the day. And you can just look at the opening price, the high, and the low. When the market opens, keep in mind that there will be either upward or downward price movement. It's got to come off of wherever it was the day before. And this is, based on investors out there making early moves. There will rarely be a point at which stocks just stays flat from where it was the day before. Even if it opens at doing that, it will quickly change as people jump in. These markets are active. Lots of shares trade in heavy volume on a daily basis. Now, market capitalization. This is a figure that represents the total value of the company and is a calculation that multiplies the stock price by the number of shares outstanding. Okay? So there are actually 6 categories, and they range from nano cap to mega cap, but for the most part, you're only going to hear about 3 categories when we're talking about market cap. You're going to hear small cap or small capitalization, which is $300 million to $2 billion in market cap. Mid cap, which is $2 billion to $10 billion. And then you're going to have large cap, which is $10 billion to $300 billion. Now, let's briefly talk about those mega cap companies for a minute. Amazon and Apple, they're mega cap companies. They're actually, their market cap is measured, believe it or not, in the trillions. Microsoft is also up there. These companies have just incredibly large market caps. So they're considered mega. All right, they're really doing things big. But you can see there where you can find that market capitalization figure. Now, market cap is very interesting simply because that's a way to help you value that company. All right, next let's get into the PE ratio, the price to earnings ratio. It's calculated by dividing the price of one share of the stock of the company, in this case Tesla, by the earnings per share for the last 12 months. Okay, so in Tesla's case, we see what our PE ratio is. So you might be asking yourself, is this bad? Is this good? Is it high? Is it low? All right, let's walk through it. The PE ratio reflects the price of the stock relative to how much the company is earning. So a high PE ratio is going to indicate that the company is in what's called a growth phase. They're probably a relatively new company. They haven't been out there for 50 years. And they're growing. There's still a lot of growth for this company. And also that the shareholders of the company are optimistic about the future, even though the company may not have the best earnings or the gangbuster earnings. Now, larger companies, more established, they've been around longer, they're going to tend to have a lower PE ratio, right? Now, you also need to consider that these blue chip companies, when I say blue chip, that's a company that's been around for a while. They've got a lot of history to look at. So traditionally, the majority of stocks have fallen in a PE ratio between 13 and 15. And that's definitely true on the S&P 500, which is a measure of the 500 largest companies, most of which are operating in out of America, even though they have international interests as well. So a high PE ratio suggests that the market as a whole could be overvalued, or this company could be overvalued, especially if their earnings are decreasing. Okay, so keep an eye on that, right? You got to understand, and in order to figure out whether or not the company's earnings are increasing or decreasing, you need to pay attention to their quarterly reports. Most companies are having quarterly reports live broadcasted over the internet on their website, and sometimes they even provide a phone number you can call in and listen to the conference call. Participate in that. Again, these are companies you own. So that's the PE ratio. They can give you some real good insight into whether a company is overvalued. And just because that PE may be out of whack and a company may be overvalued by that metric does not necessarily mean it is a company that you should stay away from. Okay, just look at the PEs over time and compare it to the earnings. Continually do that. And if the PE ratio is climbing rather quickly, that could signify that the stock is priced out of line with its actual performance, and that could raise a red flag for you. Now, let's get into dividend yield. Now, the dividend yield is a measure of income. That's right. We've talked about this on the channel before, how you can actually derive income strictly by owning a stock. This is separate and apart from the money you can make off of the appreciation of the stock price. So if you look at that dividend yield, it's going to show you what percentage of the current stock price is paid in dividends. Okay, this will fluctuate because, of course, the price of the stock is always going to be moving. So you might look at it on Tuesday and it says one percentage, and then on Thursday it may say another. But if you have some questions about how much income you can expect from holding one share of stock, this is the number that's going to give you the answer. You can get a dividend per share. So let's say you make let's say a company has a 10-cent dividend. Okay, that means that 4 times a year, the company will pay out 2.5 cents for every share you own, totaling 10 cents over the course of a year. Okay, so play around with that number and see how much money you would earn just off dividends if you owned 1 million shares. Okay, if a company does not pay dividends, and Tesla doesn't, then this section of the chart is going to have a dash, and it's just not going to read anything. Tesla doesn't pay, a lot of companies don't pay dividends, and they'll say, we're putting that money back into research and development of our products and our services. And that is going to help push the price of the stock up further than what you would get from us paying a dividend. So there are two schools of thought on that. Just because a company does not pay a dividend doesn't make them a bad choice. And just because they do doesn't make them a good choice. Now, when you're deciding whether or not, dividends are important, as you get close to a point in your life where, maybe you're realizing an end to an income stream like a job, then dividends may become more important because they may help you substitute that previous income stream that you may be losing. So there is that. Okay, the previous close number is pretty self-explanatory. It just shows you what the stock closed at the end of the previous trading session. Then we have the 52-week high and the 52-week low. Again, this is showing you the range within the range that the stock is traded in a year, the high and the low end of that. You have some other information here, like the history and the trend lines. This graph is very neat. It shows you, where the stock was, depending on several selections for time increments. You can get really discreet and creative with this. It's kind of interactive in its ability to show you different data points. Okay. So even though a stock's past performance is not going to indicate what it's going to do in the future, it can provide some context about the journey of that stock's price. Now, getting a little technical, and I don't really want to do that because technical analysis tends to be something that traders use, and this channel is all about investing a longer term. We don't do short-term trading here, but you can use the trend lines to determine what are called lines of support and resistance. So these are terms that you're going to hear more about if you trade, and we don't really advocate that because that's a full-time job. That's for very sophisticated people in terms of their financial knowledge, and also even the best of them really don't have the best track records in terms of performance at the end of the year and making money. So you're able to do that with these, but ceiling, support, resistance, those are terms that you might hear more of outside of sheerly investing. You'll hear more about that in trading. So there's sort of an introduction, a 101 of how to interpret a stock quote. Okay, I hope you found that very enlightening, and I look forward to bringing you more information like this in the future. Okay, guys, I'll talk to you soon.